Alright, what's good, guys? So today in general we're just going to be talking about price action and market structure. So this video is strictly about price action and market structures, how to read market structure and price action so you don't get faked out, or you know what to look for before placing a trade, right? And I trade gold, I trade BTC. So we're going to be doing price action on gold and BTC. So let's hop on the charts right now so I can detailedly clarify some little things you guys been having difficulties about. So let's go. What's good, guys? So this video is strictly going to be about price action and market structure, and how you guys can read price action and market structure clearly so you don't get faked out in the markets, right? So most especially for gold, right now gold is not pretty much moving, right? Gold has been being stagnant around gold has been stagnant at 5,091 and at 4,088. So that those two areas are well gold, like it's not moving, right? But if we come to look at it, you can see price on gold is building bullish structures, right? What are bullish structures? Let me just clear out everything. Let's have a clean chart. So let's have a fresh start. First of all, what is price action and what is market structure? Price action is simply how the market moves when there is volume, right? How the market is going to move when we have volume. So pretty much here's how the market moves. We have an up, a high, and a low. A higher high, a higher low, another higher high, another higher low, and so on and so forth. So this movement right here, this is called an uptrend. Excuse me. Up and uptrend, right? This is an uptrend. Let me make it a little bit big for you guys. This is an uptrend, right? And also, this is how price also moves. High, lower low, lower high, lower low. Okay, so it's my fault for that. Let's just start over. So this is also how the market moves. We have the highest point, a lower high, a lower high, another lower low, another lower high, and then another lower low. So this is how the market moves. It goes, if it's going up, this is how it goes, and if it's going down, this is how it goes. So this other movement right here is known as what? Downtrend. Right? As a downtrend. Price moves basically in two ways. We have an uptrend. So the Forex market pretty much moves in two ways. It moves in an uptrend and in a downtrend, right? So uptrends are when we keep seeing higher highs and higher lows building in the markets, right? Once we keep seeing higher highs and higher lows in the market, it's telling us that price is trying to go upwards. That's why it's known as an uptrend. But when we start seeing lower lows and lower highs in the market, it's simply telling us that price is trying to go down. And in a little bit, I'm gonna give you guys a clear, detailed explanation so you guys can see in real time what an uptrend is and what a downtrend is. So for instance, let's hop on gold, right? Let's hop on gold. We are on gold right now. What is an uptrend? An uptrend is when we keep seeing higher highs and higher lows in the market, right? So boom, That's an uptrend. If we can clearly see on gold, let's go to the daily time frame. On the daily time frame, we can clearly see that price on gold is on an uptrend. Why do I say that? Because we have a low right here. We have a high out here. We have a higher low up here. And once price builds a higher low, what is it looking to build? It's looking to build a higher high, right? It's definitely trying to build a higher high. But regardless, if we mark it up, we're gonna see that price is building higher lows on the daily time frame. You know, the higher you go, the more strong the time frame, like the more strong the structures are. So I love trading on the higher time frame because the higher time frame trends are real solid. They push through, and I'm comfortable trading on the higher time frame, right? So on the daily time frame, we can clearly see that price is building higher highs in the market, right? If we scale in more, let's go to the 4 hour. Let's go to the 4 hour. Boom. We're on the forward time frame. We could see a little bit clearer on the forward time frame, right? We have a high, we have a low, a low, a higher low, another higher low at this level, and we have price fighting here, like buyers and sellers are struggling at this area. But regardless, on the daily time frame, we know that price is trying to go bullish, right? So what we're looking for is for price to break above a level where it has lots of reactions. So where is the level of reactions? At this level here, price has a lot of selling pressure. There are a lot of sellers at this level pushing price down, right? Pushing price down. Sellers are here pushing price down. You can see the moment price build up and got to this level, sellers push price down. You can see price try breaking above it again, sellers push price down. And now price is struggling to come back, and we're still seeing reaction from the sellers, right? So we could see price react from this level and eventually give us a break, or we could see price eventually going below this level and breaking below this level of support and become bearish in the long run, right? So what we do is we just wait for price to, give us an indication of where it's trying to go to in the market, right? And by the way, I trade 3 simple steps, right? I trade indication, correction, and continuation. What is an indication? Let me just give you guys an example, right? This is what I'm trying to say. Price goes up, gives us a support, higher high, higher low, higher high, higher low. So this is market structure. This is structure. This is what we want to keep seeing in the market if price is bullish, right? So what is an indication, what is a correction, and what is a continuation? So boom, these are reaction levels, right? This is our swing high and this is our swing low. An indication is when price breaks above a swing high or a swing low, right? Indications. What's an indication? An indication is when price breaks above a swing high or swing low, right? An indication is when price breaks above a swing high or swing low. Write this down because you guys might need it. An indication is when price breaks above a swing high or a swing low. In this case, we've had price break above this swing high level, right? This is where we had sellers that push price down to give us a lower high, a lower low, sorry, right? So the moment price breaks above this previous level of sellers, price is trying to tell us that it wants to go bullish, right? That's why it's called an indication. That's why it's called an indication, right? My dad just tried to call me. I'm gonna call him back with someone. Just put my shit on silent. That is what's an indication, right? The moment price breaks above a swing high or swing low, it's an indication. So this is simply telling us that price can go bullish above this level all the way to this level right here, right? And what is a correction? A correction is simply to grab out breakout traders, right? A correction is simply to wipe out breakout traders. So when the correction happens, we don't trade the correction. The correction is the market is simply telling us that price can go bullish above a certain level, right? That is why it's an indication. So as you guys can see, the indication is from this previous swing high all the way to this new level, right? Price goes up. This is how price moves. This is an uptrend. It goes up, comes down, goes up again, comes down again, goes up again, comes down. Once price goes up, expect to see price come back down for the continuation, right? So this down, this little reaction from sellers, this is called a correction. Price is simply correcting to grab out breakout traders, those who FOMO in a breakout. Price is going to liquidate them and then continue in the long run, right, to give us another higher high. So this move down here is called what? The correction. You guys can just say a correction happens to grab out liquidity from the market. Correction happens to grab out liquidity from the market. What is liquidity? Liquidity is simply money, alright? Liquidity is simply money. People got in the trade earlier than they were supposed to enter. So the correction is simply going to grab their money, blow their accounts, and then continue going upwards, right? So this is the second step of our trade. I'm always going to wait to see price correct, and then I'm going to take it again for the second move upwards, right? So this is a correction, and the continuation is simply price repeating the same move it did with the indication, right? So a correction is price going to build another higher high or lower low in the market, right? So you can see we can simply say a correction is price going to build another higher high or higher lower low in the market. Either ways. let's say the continuation is price going to build another higher high or lower low in the market. If I got it right. Right, so this is how I trade. This is how I trade. I trade indication, correction, continuation. So this is the continuation. The moment price breaks back above the level where they had sellers. So the moment price breaks above this level where we had sellers, the moment price comes back above this level for the second time, this is when I enter the trade, and I'm looking for price to come all the way to this previous level where they had reactions, this newly created swing high, right? This newly built higher high. So that's how I trade. I'm gonna be looking for price to come back above this level, or even for price to give me a new higher high in the market, right? So with all this being said, let's go to the market so I can clearly tell you guys what I'm talking about, right? Let's take it a little bit backwards. So let's use this for instance. We had our level, give me a minute. So boom, we had this level which was a swing high in the market, right? And also this level which is the swing low in the market. Let's drag it all the way here. Boom. As a matter of fact, let's drag it all the way here. Alright? Let's drag it all the way here. Boom. So this is what I'm trying to say, right? So price, this is a level where they had sellers in the market. This is a swing high. We had sellers pushing price down, right? Sellers trying to push price down. You can see the moment price breaks above this level, this movement is called an indication, right? I love trading on a high time frame. I love swing trade. So this movement right here is called an indication. All this movement up here is known as an indication on price, on gold, right? What happens after an indication? A correction. That's the correction. What happens after a correction? Continuation. Do you guys see what I'm talking about? An indication, correction, and then a continuation, right? So this is just a clear example of what I'm talking about on price. Once price goes up, it must come down, right? If we go on the daily time frame, we're gonna see it's a little bit clear on the daily time frame, because this is the level. Swing high is swing low. Price breaks above the swing high level, giving us an indication. Corrects back to this level, back underneath our level where we had an indication. The moment price comes back above this level, this is an entry level, right from this zone and we're looking for price to come back all the way to this level right here, right? That is just price action. That is just market structure, nothing else. That's how price moves. That's how it's gonna move, right? So with that being said, that's how I trade. I love trading on the higher time frame. I love swinging my trades. I don't trade on the 5-minute, 15-minute time frame. And I'm a swing trader. I love holding my trades for a long period of time, so I can get everything from the market, right? So with that being said, this is for an uptrend, right? Gold is for an uptrend. We clearly know that we're bullish on gold, right? Let's go to BTC. The complete opposite. BTC is what? Complete opposite of gold. BTC is super bearish, right? What's a downtrend? It's when we keep seeing lower highs and lower lows in the market, right? In this case, for BTC, we're on a downtrend, right? Let me get rid of this. We're in a downtrend on BTC, right? This was our highest level on price and our support. If price is to keep being bullish, we have to keep seeing higher highs and higher lows in the market. If price is to keep being bearish, we have to keep seeing lower lows and lower highs in the market, regardless, right? So on BTC, this is the daily time frame, by the way. You can see price had a high, a low. Price sold from this level, breaking below its previous level of buyers. Let me just get rid of this and use this instead, so you guys can see a little bit clearer. Get rid of this as well. Right? So this is our swing high and our swing low. The moment price breaks below a swing low, it gives us an indication. What did I say? An indication is when price breaks above a swing high or breaks below a swing low, correct? So the moment price breaks below this level, this is our indication, right? On a daily time frame, you know that structure on the higher time frame is always going to respect more. It's going to be more stronger than that of the lower time frame, right? So as you guys can see, we did get an indication on a daily time frame. What next? You guys know we don't trade the indication, right? We never trade the indication. Boom, an indication. What are we waiting for next? For price to correct, right? Price sells, gives us an indication, correction, and then a continuation. Another low, another correction, then another continuation. Another correction, another continuation. Right? So that's just how price moves. You can clearly see that BTC is super bearish, right? Lower high, high, lower high, another lower high, another lower high, selling, breaking below its level of support, giving us another indication. So what my bias on BTC is bearishness. I'm looking to sell BTC under this level. As you guys can see, I'll set my alerts here because this is a level where price gave us a swing low. In other words, a higher low. So once price starts breaking the structures, we know that it's gonna go bearish. It's gonna go bearish again, right? So my bias on BTC is I'm gonna be waiting for price to break below this level, and I'm gonna be taking sells from here. I'm replacing my stop loss here, and I'm gonna really be targeting. I'm really gonna be targeting this level right here. I'm gonna be swinging to this level, 248K. That's how I'm gonna be playing BTC, right? So with that being said, this is my bias on BTC. This is my bias on BTC. This is my bias on BTC, right? So I hope you guys actually learn something from this video and understand something, because what I'm trying to do is I'm trying to document my Forex journey. I'm trying to help as many people as possible out there that, you know, are looking to get into Forex and they've been fucked up by mentors and gurus. So what I'm trying to do is I'm just trying to, you know, give out free knowledge, free game to anybody that needs it, you know. And if you're new to this channel, I'm Sugar BTC. Everybody calls me Sugar BTC because, you know, I'm sweet. And this is my YouTube channel. This is where I'm going to be posting contents daily for those who are looking to get into Forex. And I hope you guys, you know, get Forex, get everything, because not gonna lie, I'm gonna be dropping bangers. I'm gonna be dropping breakdowns, trades that I take. It's gonna be real. It's gonna be a real fun journey. So for those of you guys that want to, you know, learn Forex for free and follow me on this documentary, I'll recommend you guys subscribe and turn on the notification so you guys get notified whenever I drop a new video. And yeah, that's just it, guys. And I hope to see you guys in the next video. And yeah, peace and love, everybody.